Okay, so we're back with another market open live stream. Hope you guys are back today with some confidence. And as we usually do, about 30 minutes until the market opens. What we're gonna do first and foremost is we're gonna conduct our pre-market analysis really quickly. And today we're going to be analysing US30 chart as we usually do, and we're going to try and discover why it is that the markets are somewhat giving back the gap up that we had. And this is really just what I've predicted. I've been short in the markets for quite some time now. I've been short in the market since Thursday, which is perfect because me being short allows me to be stress free in this market, because I'm expecting the market to go down. However, what I'm gonna do, just really quickly, I'm gonna start with our pre-market analysis. So we'll start our day off today, November 3rd, and we'll do what we usually do. We'll get our notebook out and we'll create our pre-market analysis for the day. And our pre-market analysis is pretty simple and straightforward, really. What we do is we just fill out this little breakdown to try and determine what we're expecting to see in the markets for the upcoming day ahead. So let's get straight into that. So really quickly, if we hop onto the daily chart, and as I said already, I've been bearish in the market since Thursday. I got in towards the end of New York session on Thursday. I got into my shorts, and as I said already, I'm looking to target liquidity all the way down here, potentially even at this level down here. I believe that we're about to have a massive pullback. Not crazy, just about 5 or 6% before we continue our rally upwards. However, if we take a look at the market, we'll see whether or not I'm still justified for sitting in this trade. So first things first, what we wanted to do, we wanted to analyse whether or not we're in a bullish market, and the truth is we are in a bullish market. However, there are certain situations where it provides us opportunities to look for short positions. So we'll look to see if that still stands for today. However, we are in a bullish market. Our external target that was taken last week, Tuesday, I was taken right there. So we have swept our external target, which was our external highs. So if external liquidity has been taken, we can now mark this out and say, alright, so external liquidity has been taken, we have a potential for reversal trades. And that's why I was able to position short last week Thursday. I believe it was last week Thursday, yeah. That's why I was able to position short last week Thursday, because when we have a reversal condition that allows us to target intraday liquidity, as we have seen, that allowed me to position short here. So going forward, we're looking to see if we're still going to be able to sit short in this market. And let's have a look. Alright, so the market condition is trending. We know it's bullish. We want to also identify important areas of fair value, and we have this massive opening gap here which is still yet to be filled. So we've got our massive opening gap, which is also fair value. So we'll call that opening gap / fair value. And then from there we go on to identifying our important levels of internal liquidity. So we're going to hop on to the 4-hour chart, and we had internal liquidity resting here, and also we have this unfilled gap, so that counts as internal liquidity as well. Nevertheless, as we're in a bullish trend, we want to target our session lows, and our London session lows, we already swept that. Coming into the session, we already swept that in pre-market over the last hour. we was able to target that. So the beauty of once we've targeted our session liquidity lows, what that means is we now have an area for price to continue lower from, as we've targeted our session lows. So going forward, we've targeted our internal liquidity. We've also got our previous day's high and low, and as I said already, we're bullish, so we want to identify where our previous day's low is, which is right here, and we'll mark that out on the chart. So we've already targeted our London session low, so we'll remove that. That's no longer useful to us. This London session low is no longer useful to us, so we'll just keep our eye out on our previous day's low, which is this level here, and that also is in our opening gap. Okay, so moving on, we've highlighted our previous day's low. We've also identified our previous session low, which was our London session low, which was already swept there, and obviously our Asian session low would have been the gap that occurred today that we've already closed. So now our only level of internal liquidity is our previous day's low, and we've marked that out on the chart. So going forward, we want to identify whether or not the hourly chart and the 4-hour chart is in confluence with the overall trend. And what that means is if the hourly chart and the 4-hour chart is in an uptrend, and from what we can see, the hourly chart and the 4-hour chart is in a way trading a sideways range. We're not actually going anywhere on the 4-hour, we're just trading up and down within this range. But within this range, we've begun to make lower highs and lower lows. And so this trend, this overall trend, I'd like to say, on the hourly chart and the 4-hour chart is actually, on the 4-hour chart it's relatively inconclusive. However, on the hourly chart, it's more clear to us that we're actually in a downtrend. And we can see that because we had a sweep of liquidity up here, and then from there we started making lower lows and lower highs. And so this market is poised to continue going down as the hourly chart is currently in a bearish order flow. So we'll mark this out quickly. Hourly chart is in bearish order flow, and 4-hour chart is inconclusive. So what this means is if we're in bearish order flow, we can't take bullish trades. If we're in inconclusive order flow, we also have to sit on our hands. So that's why it's important that we looked out for those two things as well. So based on that, based on what we've got on the chart, we've got our bullish bias. Bias is bullish. External highs was our target. We've taken our external liquidity. We have a potential for a reversal. Trades targeting intraday liquidity is good risk. We've already targeted our intraday liquidity and swept it, which was our London session low right here. So now we're looking to target our previous day's low. That's the only other level of liquidity on the chart, and that will also result in us closing the gap. In my stream that I conducted on Friday, I talked about how when gaps get closed, it's a bearish indicator, and we saw this on I gave you two scenarios. First scenario was on the 28th of July right here. We saw this gap up get close to the downside. We saw that result in a downward move, and then we also had this other example right before the crash in April. It began in I believe February. We had a gap higher right here. This gap resulted in a downward move to be closed, and then price came back, pulled up to our order block right here before we ended up coming back down. So the closing of gaps is very important. That's why we're looking for bearish price action today, because if we do get our gap closed, this gap closed, it will result in bearish price action. That being said, if we don't see this gap be closed, then there is a potential that price just bounces up from where we currently are. And so we are going to keep our eye on this as we're currently sitting in bullish order flow and bearish order flow. So if price was to turn bullish here, what this would look like would result in the 4 hour chart rallying higher, the hourly chart also rallying higher, and it would need the hourly chart to close above here um, by 3 p.m. and that would be an indication that we're in bullish order flow on the hourly chart, which would also push us into bullish order flow on the 4 hour chart once we got above this level, and then that would have us in confluence with the overall trend on the daily chart as well. So there is a chance that price begins its bullish order flow move from where we currently are. There is definitely a chance that that occurs. However, we want to wait for the New York Open, which is in 15 minutes, to take place and play out before we make any decisions on what direction we want to trade in. And so, based on that, we're going to be cautious, and I'm happy with where I've already positioned in regards to the short position that I'm in, and I will happily close out my positions today. If the market fails to close this opening gap within the next day or two, we need to see this gap closed fairly soon. If not, that will confirm further buys in the market. And so we're going to keep our eye on that. We've got about 15 more minutes until the market opens. I'm in a short trade, as I said already, based on our potential reversal, and my belief is that we end up going down here to target major levels of liquidity. There's a chance we do hold some of these fair value gaps, that we could hold this gap right here. However, I want to see price come down and clear out all our liquidity in this area, in this pool of liquidity first. That's what I want to see ideally. And so this is the trade that I'm in. Okay, perfect. Alright, so we're gonna keep our eye on this, see what happens over this session. Market about to open in about 20 seconds. Keep watching. I'm already long in this trade. I'm already short in this trade. So what we're gonna want to see is we're gonna want to see whether or not price is able to come down and sweep our session lows and continue in a bearish direction. And as I said already, I'm already long in this trade. So this is the trade setup. We'll see what happens. Alright, so we're going down. We need to wait for the candle to close, obviously, 15-minute candle. But this is exactly what we want to see. What we don't want to see, however, is we don't want to see a bounce from inside our gap. You want to see this just continue to fall, and that should be indication that the gap's going to be closed today. And then we should see price pretty much waterfall off a cliff. So we'll keep our eye on that. I'm just having some lunch, so don't pay too much attention to me. Alright, so we got about 10 minutes until the candle closes. What we want to see is we want to see aggressive price action going into this gap. We want to see this gap completely clear today, and that's the whole point of the purpose of today's trade. Obviously, this trade idea I built over the last couple of days anyway, so I was able to position a while ago, meaning I didn't have to actually worry about getting positioned today. I got positioned on Thursday towards the end of New York session, and so what we don't want to see now is we don't want to see a bounce inside the gap. We want to see the gap completely close, and we want to see price actually close down inside the gap. So we'll keep our eye on that. Alright, so we got about 5 more minutes until the candle closes. The hourly chart's looking pretty good. Well, obviously in the downtrend of the hourly, as I mentioned, um, which prevented us from taking long trades. We're also beginning to turn into a bearish trend on the 4 hour chart. with about 20 minutes to go until the 4 hour closes, which is also very, very good. So everything seems to be in confluence. Now what we need finally is for this gap to be closed to the downside, and that's what we're going to be looking for in this session. We're going to be looking for the gap to be closed, and that means price declining probably another 250 pips from where we currently are. And if we get that sort of decline, it should allow us to be perfectly positioned for what I call a liquidity sweep on the upside, which is going to allow us to target liquidity on the downside. And what could happen today is we could have a minor, I don't want to call it a crash, but maybe a 1% move down, or maybe 0.5% from wherever we are today, but just down to around this area here, 124, and that would allow us to have our trade aggressively displaced back into the range, which is bearish. Which is a bearish signal. So if we're down 1% for the day today, that's going to be perfect in signaling that the market is targeting our liquidity at lower levels. And so that's what I'm keeping an eye out for today. I'm still trying to decide whether or not I'm going to sit through the whole day in front of the charts. I don't really need to, because of where I'm positioned. I'm positioned in such an excellent place. I don't really have to worry about price fluctuating. Just once we get towards the lower range, once we target our previous day's low, I think that's when I'll consider switching off the charts. I don't need to watch the charts for the day. However, I'm relatively happy with what's going on the chart so far. So we had price gap up today, and that gap has been closed. So that in itself is a bearish move. As long as we get a close below here in the next couple of minutes, we should be all right. I'm talking about this area right here, so we'll keep our eye on this. However, what we're really looking for is the close below this gap down here. So we've got two gaps that we're keeping an eye out for, and that is this what's led to our overall gap as a whole. So that's what I'm expecting to happen. And we're a couple of minutes away from the 15-minute candle closing, and so we should see further bearish action come in after the candle was closed and confirm that we're closing below this below this opening gap that occurred today. So we'll keep watching that. Alright, so we're looking for quite a massive decline over the next, probably this week and probably the week after, but that all stems from the closing of our gaps, and we're keeping an eye out for the 15-minute candle gap first, which is this gap which occurred on Sunday. We saw a massive gap up, so if we get a close within the next 30 seconds, which I am expecting, we'll get rid of this line, and that's a confirmation of that gap close, and that should be enough indication for more sellers to come in quite aggressively to aim to close the lower gap, which is the more pronounced gap that we're looking to be closed, which is this gap which took place on Friday the 24th and Monday the 27th. So we should see within the next candle, we should see aggressive move down, and that aggressive move will eventually close this gap on the lower side, and then we'll see price begin our decline. And as I said already, I got a position on Thursday, and I was happy with the position on Thursday, so I didn't have to really worry about getting positioned today. But I'm expecting this single trade alone to make me 20k before my payout day. So we'll see what happens. It's about a 30R trade, and I'm pretty happy with the position. So yeah, we'll keep our eye on this. So we're looking pretty good so far. As I mentioned already, we're looking for a massive drop in this session. Let me get rid of a few of these things. What's nice to see is this curve and the failure to turn back up. So that is nice to see as well on the 20. But I'll take these moving averages off. We follow price action. So what we're looking for in this session is continued bearish movement. And what we want to see at the end of the session is we want to see a close below our opening gap. And what's nice is that we're beginning to have some aggressive bearish movement down now. On top of that, we've had our hourly candle close, and this is indicative of a bearish trend on the hourly continued, as well as the 4 hour chart has also closed down, and we closed below this level as well. So we've officially turned into a downtrend on the 4 hour chart, so that's also very, very nice. So now what we're looking for is just this gap to be closed over the day. What I really want to do is just stop staring at the charts. I want to kind of get away from the charts, as I'm positioned in a very sweet spot. As you can see, I got into the trade on Thursday, and I've just sat and watched all the consolidation and sideways movement through Friday's price action, as well as a little bit today. But I'm expecting aggressive price movements down, so I will revisit this maybe at the end of the session or even tomorrow. I don't feel the need to sit in front of the charts. If we take a look at the 15, if we do get somewhat of a green candle close here, maybe I'll keep an eye on this for the next 15 minutes for the next candle close, because what we don't want to see is we don't want to see bullish movement from this area, because that would tell us that we've swept our previous day's lows. So if we get a green candle print now, that could potentially be a catalyst for bullish movement, because obviously the overall trend is still bullish. So we need to watch out for any indications of further bullish activity, and that will be told to us by a close of the green candle on the 15-minute chart. So that's what we're going to watch out for. So I'll keep my eye on that over the next 15. Maybe I might continue to watch this for the day, only because we are inside a gap, and this is pretty much a turning point. So I'll keep an eye on this. I won't get away from the charts just yet. But it was looking pretty decent. However, we need the hourly chart to continue its aggressive movement down, and that's going to require further red candles on the 15. So we'll keep our eye on that. All right, so we're starting to see quite a bit of movement going on here. Exactly what we planned out for, exactly what we was expecting to see on here. And what's lovely is now we've just broken below our gap, our opening gap. We've broken below it, so we've now closed our opening gap. So which is perfect. Now all we're gonna do is pretty much just watch out to see how the day closes. As long as we close below the gap, we should pretty much still see an aggressive move down. But what we really want to see is we want to see an aggressive push back into our range, which is below this level of 128, 47128. That's what we want to see into the end of the day. And then from there we should see an aggressive correction over the next week or so, which should take us down to our profit targets down here. On this trade, I'm looking to make about 20k. This is a 30R trade. These type of trades don't happen all the time, so when they do, you really want to capitalize on it. And just so you guys are aware, and you know that I'm not. This trade is really taking place. I'll show you quickly the trade running. So if you want to take a look at that, trade's currently running. As you can see, it is updating. So that's what it's looking like at the moment, and we're gonna expect to see this trade really play out over the next week. Over this whole week, we should expect to see this trade really play out, and we should see a massive decline. I don't really see it. I don't see it not heading down to this level of liquidity. I will mark a couple levels out. Probably this level here is our nearest liquidity level, and I believe that the gap that we're currently in, I believe that should already be breached probably by the end of today. We should see this gap breached, so I'm expecting maybe we get down to here by today, about maybe a few percentage points down for the day. But yeah, at the very least, I'm expecting us to come down and sweep this level, and so this is going to be a massive 30 something R trade for me. So we'll keep an eye on that. I'm not going to keep on watching the charts for the day. I think I'm happy with where I'm positioned, so I'm just going to let the trade run. I'm going to close stream for now. If you like the content, definitely hit the subscribe button, and I'll catch you guys back in the next one.